The 200-day moving average is a widely used technical indicator in stock trading and investing. It is a moving average that calculates the average price of a security over the last 200 days, smoothing out short-term fluctuations and providing a longer-term perspective on the stock's price trend. Traders and investors use the 200-day moving average to identify the overall direction of a stock's price movement and to gauge its strength. When the current price of a stock is above its 200-day moving average, it is often considered a bullish sign, suggesting that the stock is in an uptrend. Conversely, when the price is below the 200-day moving average, it may be seen as a bearish signal, indicating a potential downtrend. The 200-day moving average is not a standalone indicator, and it is often used in conjunction with other technical analysis tools to make more informed trading or investment decisions. Some traders also pay attention to crossovers between the 200-day moving average and shorter-term moving averages, as these can signal changes in the stock's trend. It's important to note that while the 200 DMA is a useful tool, no single indicator guarantees success in the stock market. Always conduct thorough research and consider using a combination of technical and fundamental analysis to make well-informed decisions. Additionally, past performance is not indicative of future results, so it's essential to adapt strategies based on current market conditions. But here are a few strategies that people use for long-term investors. The 200 MA can be used as a guide for overall market trends. Buying or holding stocks when they are above the 200 DMA and considering reducing exposure or adopting a more defensive stance when they fall below can be part of a long-term investment strategy. Also remember to implement proper risk management techniques, such as setting stop-loss orders. This helps limit potential losses in case the trade doesn't go as expected. It's often a good idea to use the 200 MA in conjunction with other technical indicators or chart patterns to confirm signals. This could include indicators like the Relative Strength Index, RSI, Moving Average Convergence Divergence, MACD, or chart patterns like double tops or bottoms. Traders may consider entering a long position, buying, when the stock price crosses above the 200 DMA, signaling a potential uptrend. Also, traders may consider selling or taking a short position when the stock price crosses below the 200 DMA, indicating a potential downtrend.